Picture this: you're sitting on the sidelines watching the greater Toronto area real estate market, wondering if now is finally your moment. Well, what if I told you that November 2025 just delivered something we haven't seen in a while? Prices dropped across every single property type in the GTA. We're talking 2.5% down overall, with condos leading the decline at 2.8%. And here's the kicker: there are now over 24,000 active listings sitting on the market. This isn't just a shift, it's a legitimate buyer's market taking shape right before our eyes. But here's the question: are you equipped with the right data to actually capitalize on this opportunity, or are you going to let it slip by while others jump in? Stay with me, because today we're diving deep into the numbers that matter, and I'm going to show you exactly what's happening right now in the GTA market. Before we get into the meat of this report, I want to talk about something critical: why we analyze month over month data rather than just year over year comparisons. Think about it this way: if you were in the market right now, either looking to sell your property or searching for your next investment, would you want to know what happened 12 months ago? Or would you rather understand what's happening right now, this month, in real time? The answer is obvious, right? Month over month analysis gives us the pulse of the market as it's beating, not a historical echo. And here's another thing: we're going to go through a lot of numbers today. I know, numbers can feel overwhelming, but here's why I focus on them. The numbers don't lie. They don't have opinions or biases. They don't tell you what someone thinks might be happening. The numbers spell out exactly what is happening, and you need this data to arm yourself and become a better, smarter real estate investor. Let's start with the big picture for the greater Toronto area. In November 2025, the median price across all property types came in at $885,000. That represents a 2.5% decline from October's $907,500. Now, some people might hear that and think, oh, prices are falling, the sky is falling. But hold on, let's put this into perspective. We had 4,703 properties sold in November, but here's the crucial detail: there were 24,368 active listings on the market. That's a massive inventory pool relative to sales activity. What does this tell us? Simple supply and demand economics. When you have significantly more supply than demand, prices naturally adjust downward, and that's exactly what we're seeing. The average days on market increased to 32 days, and more importantly, the property days on market, which tracks how long a property has actually been available, including relists, jumped to 73 days from 68 in October. Homes are sitting longer, inventory is piling up, and buyers have the leverage right now. Now, let's break this down by asset class, because not all property types are experiencing this shift equally. Starting with detached homes, the largest segment in the GTA. Detached properties had a median price of $1,175,000 in November, down 2.0% from October's $1,199,450. We saw 4,586 new listings hit the market for detached homes, and the property days on market in October sat at 66 days. Detached homes are experiencing the most modest cooling, which makes sense given they're typically the most resilient asset class in any market correction. Moving to semi detached homes, and this is where things get interesting. The median price dropped to $910,000 from $930,000 in October, a 2.2% decline. But here's what caught my attention: semi detached homes had the shortest property days on market at just 49 days as of October. That's the lowest among all property types. What this tells me is that despite the overall cooling, well priced semi detached properties are still attracting buyers relatively quickly. Why? Because they offer a sweet spot, a balance between space and affordability that's particularly attractive in this recalibrating market. 809 new listings came to market for semis in November, and they're clearly finding buyers faster than other segments. Freehold townhouses showed a median price of $870,000, down 2.2% from October's $890,000. We had 884 new listings for townhouses with property days on market sitting at 61 days in October. Townhouses are following the broader trend but remain a solid middle ground option for buyers who want freehold property without the detached price tag. And now the segment that's really feeling the pressure: condo apartments. Condos dropped to a median price of $565,000 from $581,000 in October. That's a 2.8% decline, the largest monthly drop of any property type. And it gets more revealing. Condos had 3,384 new listings in November, and the longest property days on market at 81 days as of October. 81 days. That's significantly longer than any other segment. What we're seeing in the condo market is a classic case of oversupply meeting weakened demand. Investors who've been holding multiple condo units are feeling the pinch, and first time buyers have more options and negotiating power than they've had in years. If you're a buyer looking at condos right now, you're in the driver's seat. Now, some of you might be thinking, okay, month over month prices are down, but is this just a seasonal blip? Great question. Let's look at the year over year data to confirm what we're seeing. Compared to November 2024, prices across all property types in the GTA are down 6.2%. For condo apartments specifically, we're looking at a 9.2% year over year decline. This isn't a 1 month anomaly. This is a sustained cooling trend, a market rebalancing after the peaks we saw in previous years. The Toronto Real Estate Board's data makes this abundantly clear. We're not in a crash, but we're definitely in a recalibration phase where the market is finding a new equilibrium between what buyers can afford and what sellers need to accept. So, what does all of this mean for you, whether you're a buyer, a seller, or an investor? If you're a buyer, this is your window. The combination of falling prices, rising inventory, and extended days on market means you have negotiating leverage that we haven't seen in years. Don't rush. Be selective. Use this data to make informed offers below asking price, especially in the condo segment. For sellers, the reality is you need to be realistic about pricing. The days of overpricing and getting multiple bids within 24 hours are behind us for now. Work with an agent who understands current market conditions and price your property competitively from day one. And for investors, this is opportunity time. Markets that are cooling create entry points for those with capital and patience. Think long term. Real estate is cyclical, and buying during a rebalancing phase when others are hesitant has historically been one of the smartest plays you can make. Just make sure you're running the numbers correctly and understanding your cash flow, especially if you're looking at rental properties in the condo segment. If you're finding value in this content, don't forget to like this video, subscribe to the channel, and hit that notification bell so you never miss an update. And if you know someone on their own real estate journey who could benefit from this information, be sure to share this video with them. Your support helps me continue creating valuable content for you. Regional context, 8 to 8:45. When we step back and look at the region as a whole, the GTA's broad cooling contrasts with more volatile local markets we sometimes see, where prices might jump temporarily in a given month. However, the common thread across the entire region is those extended selling times when you look at the true property days on market metric, whether prices are dipping or experiencing temporary spikes, homes across the region are spending more time on the market. This indicates that today's buyers are cautious, selective, and willing to wait for the right deal. They're not panic buying, they're being strategic. The story for the Greater Toronto Area this November is one of clear cooldown. We're seeing prices dip across the board, homes taking longer to sell, and a lot more choice for buyers with over 24,000 active listings. The condo market is feeling this shift the most, with the biggest price drops and the longest wait to sell. While semi detached homes are moving a bit faster, the overall message is consistent. Patience and negotiation power have shifted to the buyer's side in this rebalancing market. This is not the time to make emotional decisions. This is the time to be armed with data, to be strategic, and to make moves that align with your long term financial goals. Here's what I want you to do next. If you're serious about navigating this market, whether you're buying your first home, selling a property, or looking to build your real estate investment portfolio, I want to invite you to book a call with me through my Calendly link, which you'll find in the description below. We can talk about all things real estate. I'll walk you through an in depth analysis of a potential home purchase or provide a comprehensive home evaluation. And here's something else, I'm also a licensed mortgage broker, which means I can assist you in securing a new mortgage or restructuring your existing one to better suit your current situation. Don't navigate this market alone. Let's work together to turn these market conditions into your advantage. Book your call today and let's make your homeownership dreams a reality. Stay savvy, stay informed, stay knowledgeable, and until next time, may your investments flourish and your dreams of homeownership become a reality. Catch you in the next one.